With that, we'll be moving ahead to our next session, Global Equity Investing Platform Showcase, SGX, by Ms. Deepa Aggarwal, Chief Representative, SGX India, Liaison Office. A big round of applause for her.
After I think a very diverse set of presentations just before me, a little bit of ground was laid when the gentleman before me did talk about global investing and therefore the requirement, of a unified solution, etc. But just take you away from all of that for the next 15 minutes. Um, I work at the Singapore Exchange. I'm based in Bombay, and today my topic will be the Singapore equities market. I think talking to some of you over lunch and casually just reinforced the feeling that a lot of family offices, high net worth Indians, etc., are using Singapore as a conduit for investing outside of India. But how many of you or how many of them are actually tracking Singapore equities, Singapore ETFs, Singapore REITs, etc.? Not too many. And the feedback I keep getting is that the awareness level is very low. So I hope by my participating in events like these and talking to more of you one on one, I can help build the awareness. And just before I deep dive, and it's really just a 2-slide presentation, I think with 25 years of markets behind me, in various, I was more OTC than exchange actually. The one thing that I've learned and what I keep telling friends is, you can't put all your eggs in the same basket, which is a very big cliche, I know. But we've seen so much money flow out of India into overseas, equity. But where is most of it gone? To the US, as we all know. So it's obviously easier said in hindsight, but should one have diversified? Should one look at least 20% of your basket in a more stable, less volatile, predictable? You want to take money offshore, completely understandable. What's happening today? You're sending children to study offshore. You are trying to diversify your own interests. Given the LRS, rules that $250,000 per family member, it's attractive to start taking, keep money outside. So let me quickly delve into what the Singapore markets have to offer. What are the sort of returns and risks, and happy to take on anything after that. So the STI, which is the Straight Times Index, which is really the equivalent to Nifty, I'd say. So it's the top 30 stocks which really are very, very diversified. The STI is built, like I said, with 30 stocks, the three strongest banks, DBS, OCBC, UOB, lot of business with strong economic foundations that span even 3 centuries, and they have significant Asia Pacific connections. So I think what Singapore has to offer is the heart of Asia. If you ask me what's the market cap, it's a small market cap compared to a lot of other economies. But Singapore also does represent 25% of the FTSE ASEAN All Share Index. If I were to ask you today who's China's largest trading partner, and it's not the US anymore, it's ASEAN. So Singapore represents 25% in the FTSE ASEAN All Share Index, with the STI maintaining huge correlations to most of the regional, whether you look at a Hang Seng or Malaysia or in Indonesia, they're very strong correlations. So if you and I really wanted to take exposure to Asia, and then within Asia, of course, sector-wise or different, Singapore is a very, very good representation of the same. There's an STI ETF, which has been listed for more than 20 years, and since inception has generated a 6 odd percent annualized return. Now, a 6% return in Singapore dollars, add on the Sing rupee, appreciation of another average of what? I mean, in the last 4 years, Sing rupee has gone from 50 to 57 as we speak. So you're talking about an average of, let's say, about another 3.5%. A 9.5 to 10% rupee return for your money sitting in Singapore, which are stable, less volatile, more predictable, and in a very safe jurisdiction, is a good kind of a return risk, a risk return reward to have for a part of your entire portfolio. So these are just a lot of graphs, and if anyone's interested, I'm happy to share the presentation. As we said, the STI is primarily the three strongest banks. At the sector weight is 45%. The next largest component is REITs, which is what I'm going to be talking about on my next slide. And then you've got industrials, real estate, telecom, like Singtel. Us, SGX, ourselves are also listed and are a part of the 30 stocks of STI. So various financials, energy, utilities, etc. So the STI really is an index worth watching. Those of you who've got all these digital platforms and Reuters screens, etc., do add on that STI in the variables that you watch, and over time the STI will give you a decent return. I don't say super normal, with the objective of having an overseas investment as well. The second thing that we really pride, and a lot of private banks and wealth in Singapore invests and looks at very, very closely, is the REIT market. We list approximately 40 REITs. Out of these, more than 90% of the REITs are property trust. They hold overseas assets. So I'm not saying they're only Singapore assets. A lot of them are US assets, etc. But there are in excess of 40 REITs listed on the Singapore Exchange with a combined market cap approximately of $95 billion. So compared to a $9 or $9.5 billion market cap of the Singapore Exchange, the this is a huge, and really, what's the reason that the REITs are so popular among the private banking community, individuals, etc., is because it's a very well regulated market. Like anything else in Singapore, it's very well regulated. For example, one of the regulations around REITs is to limit a gearing ratio of 50%. They also offer wide diversity across property subsectors. So whether it's industrial, residential, rental, retail, office space, specialized, etc. Once again, the average yield, actually in the last 12 months, the average dividend yield given off REITs was 7.7%. And these are in Singapore dollar return. The FTSE REIT, or the 10-year total absolute return, has been 60%, with an average gearing ratio of 37%. So if you just were to do a quick comparison of the REIT forward dividend yield, that's a dark blue line, versus the Singapore 10-year Govie versus the yield spread. So the dark blue line, which is the FTSE Straight Times REIT Index forward dividend yield, is clearly the highest of the three lines, and it hovers between the 6 and 7.5% range. So once again, REITs are a very, very popular instrument. A lot of high net worth family office funds go into REITs. We're very, very happy if there's any institution in India, anybody who would like more details about this. We're happy to hold just a REITs conference, in fact, and bring my experts down from Singapore to talk about this. But essentially these are the two aspects I wanted to talk about today: the Singapore equity market and the Straits Times Index in specific. And the second is that Singapore is one of Asia's largest REIT and property trust markets, with again a 6 to 7.5% annualized yield. On top of that, the rupee depreciation benefit, and being in a country like a Singapore, which is again very safe, predictable, and good jurisdiction, very well regulated, makes it an attractive proposition to diversify at least a part of one's assets into Singapore, not only using Singapore as a conduit to be investing in other geographies out of Singapore, but also as investments into the Singapore assets themselves. And the whole infrastructure has actually become very, very friendly now, because obviously Singapore also being a very large private banking a country, the opening of a bank account, the maintaining of the overseas, the LRS, they all, and the Indian diaspora is so well entrenched in Singapore that they're completely well versed with the Indian regulations, what our LRS permits and doesn't permit, etc., etc. how the bank opening process. So once that is done and the monies have been remitted to Singapore, there are enough and more brokers, members who are members of the Singapore Exchange who can offer you these products. So I'm happy to take on any questions, leave my contact behind. I am the face for Singapore here in India and happy to, take this forward with anyone who's interested. Any questions, queries about Singapore or SGX? No, they all finally you have to declare it in your, we don't give tax advice, but I can just speak casually offhand that it's any investment that you do out of Singapore has to finally be reported back in your global income in the India books and be treated as per tax rules here. There's no separate taxation. We've got Singapore, India has taxation treaties, etc. Yeah, nothing separate. Thanks everyone. Thanks for the thanks. Short and sweet. Thank you.
A big round of applause for her.
Thank you.
One.